It's 1:30 p.m. in Lagos, 12:30 in London, and we're bringing you markets, analysis, and insights on business incorporated live from Channels Television here in Lagos. And here's what's coming up on the program. British government commits $26.5 million to address food security in Nigeria, Kenya, and Uganda. And Kenya inflation unexpectedly quickens to a 3-month high in October. And Uganda to stop importation of oil through Kenya cites high prices from government-to-government deals. Hello and welcome to the program. I'm Will Ibang. Let's kick off with the markets. First up, major equities in Africa. Let's see what the equities are doing at intraday. Major equities were trading in mostly negative territory. Let's look at Nigeria, though. It was the only outlier with a 1.82% uptick today. Amazing, and hitting the 70,000 level. South Africa, however, was in the red, 0.64% down. And in Egypt, let's see what is trading at intraday. EGX 30 was down, however, more than 1.42%. And Kenya closing Tuesday's session in the red. And let's look at what's happening at the NGX. What's driving it? What drove it to the 70? Are we going to maintain that? Onase Asotie Naolo, investment analyst, Main Street Capital, joins me to discuss this. Onase, we hit the high of 69,000 yesterday. Now at intraday, it was trading at 70,000. Is this what is currently going on now? Because the last time I checked was 70. Is this currently at 70? What is making the move? What stocks are trading, making the moves?
Well, right now, the highest gainer is Airtel Africa, and it's up by 10%. I don't think it can go much higher than 10%, but right now it's up by 10%. And that is one of the stocks that is driving. The other one is UBA, about 3.5 billion, worth of UBA shares, are trading in the market right now. And we see investors are really eager to get into, especially banking stocks, and of course Airtel, because a lot of banking stocks they've published now. This is earnings season, Q3 results are coming in, and a lot of banks have published really very positive results. Now of course we know it's because of the FX revaluation gains, but it's really positive. For example, UBA, for their 9-month period, UBA is up, their earnings, profit after tax, is up about 286%, while for Q3 is up about 55.4%. So we see a lot of really good gains for, banking stocks, and that's what we see pushing the market up right now.
So we did see that some stocks, their earnings reports were not good. We're looking at Boa Foods coming up with a decline in profit after tax, or the profit before tax. Can you talk about some of these companies, how they're performing at intraday? Are investors taking advantage and trading the dip?
Well, right now, for stocks that are, pushing downwards like Boa Foods, not really. Investors aren't buying the dip for those stocks. Even some really good stocks that that posted good gains like MRS, they're still trading lower, and that's because investors can project that, okay, one, with some of these banking stocks, they can project that, okay, this FX situation, if it keeps going on, even if things were to stay as it is right now in the FX space, these banks will still make profits. And another thing with some FMCG companies, like Boa Foods, is some of them are still suffering from the FX losses from FX revaluation gains. I know I looked at a stock like Cadbury, which is actually up. Cadbury's Q3 result was positive. They were up about 4.2 billion, profit after tax. But for their 9-month, they were still about 10.4 billion in the hole. And that's Cadbury is one of the good cases. Other FMCG companies like Boa Foods, they are still suffering from FX revaluation gains, because the interest rates, the exchange rates rather, have still been going up even in the third quarter. So I expect that a lot of FMCG companies, for at least right now, we might see declining prices. Apart from companies that post maybe Q3 results, because then a positive Q3 result from an FMCG company might hint that they are beginning to get, the exchange thing under control. And then we might see they might now go back to being positive, which is the case for a company like Cadbury.
Let's go back to the movement in the index as the all-share index. Now, some people of the opinion that investors may be hedging using the NGX, the ASI as a hedge against inflation. Is that the case here? Do you share this opinion?
Well, it is possible, that investors are using it as a hedge against inflation. And if they are doing that, then you mostly see that in banking stocks, which is what we are seeing, because if inflation keeps going upwards, then we expect that, even the Monetary Policy Committee that is set to meet this month might be forced to raise the monetary policy rates. And if they raise the monetary policy rates, then banks profits, because then they can raise the rates at which they give out loans. So it is possible that a lot of investors are hedging. It could also be possible that at this point in time, investors are beginning to get in for dividend payments next year. Because if you look at what happened last year in November, it was November that we started seeing the rally. The market started rallying. The rally that I think ended sometime in March before another one started in May, June. That started in November. Because I know I've spoken to a couple colleagues at other firms, and they're all looking at next year, okay, what's going on next year. And when it comes to even dividend payments, a lot of people look at banking stocks, which is what we're seeing. So it is very possible that they are looking to hedge, but then there's also a high possibility that they are also looking for dividends. I mean, in this situation with banking stocks, you could really kill two birds with one stone, and so it's natural that we see a lot of people getting into the market right now.
We'll see how investors kill two birds with one stone. That will determine. We'll see how the market closes. We'll know if they were killing two birds with one stone. Thank you so much, Onose Asotie Enaolo, investment analyst, Main Street Capital, for joining us.
Thank you for having me.
Now let's go over to the Middle East, where markets were rolling in green grass at intraday. The Abu Dhabi index was up 0.91%. Very much in the green. Dubai also in the green, 0.4%. Elsewhere, Saudi up 1.48%, and Qatar was also up 0.59%. That's more than 0.5%. Now, Britain is hosting the world's first global artificial intelligence safety summit today to examine the risk of the fast-growing technology and kickstart an international dialogue on regulation of that industry. Now, Elon Musk is going to be there, as well as a host of other important personalities. We're going to be joining Juliana now with more updates on that. Juliana, good afternoon. Prime Minister Rishi Sunak says AI risk must be addressed. This is one of his core issues he feels should be addressed ahead of this key safety summit. Are these risks being addressed yet?
Good afternoon, Will. Well, they absolutely are. That's the reason why we've got hundreds of world leaders in Oxford, which is hosting this two-day summit, which is a huge summit talking about the safety of artificial intelligence. Of course, we know it's an absolutely extraordinary discovery, which has changed lives. I think one of the key talking points that have come out of this morning's sessions is that artificial intelligence and its discovery can be compared to the splitting of the atom, the discovery of electricity, the creation of the will. That is just how important it is. And I think Rishi Sunak has really tried his utmost best to put Britain as the leader in trying to resolve some of these issues, as well as harness the importance of artificial intelligence. Just before I came into the studio, I just finished a conversation actually with the Honourable Minister of Communications, Innovation and Digital Economy, Bosun Tajani. He is actually here in the UK, and he gave a 5-minute address this morning. We've also got leaders like the US Vice President Kamala Harris. She flew into Stansted yesterday. She's at the meeting, as well as the EU Commission President Ursula von der Leyen. You're right, Will. I did also spot Elon Musk in the crowd. Lots of suggestions that perhaps he wouldn't be coming and he would only be doing this interview tomorrow with the Prime Minister virtually. That's not the case. He is there, and he's obviously a significant player. A lot of people know him for Tesla, for SpaceX, for Twitter, now X, but then also he is the founder of OpenAI, and OpenAI is the parent firm of ChatGPT, and that has sent shockwaves down some workspaces, because they're not sure whether or not these types of technologies that are emerging from artificial intelligence are going to make their jobs extinct. So these are the kind of questions that are going to be answered at this summit. The Prime Minister is yet to speak. As I said, we do have Nigeria being represented there by the Honourable Minister. So it's a great time to have this conversation. Unfortunately for the British government, there are major distractions, one of them namely being the war in the Middle East. And I think that's kind of taken the shine off of what was supposed to be the biggest conference of the year, bar COP coming up at the end of the month. But so far, so good. Lots of big names in attendance, and certainly I think we're going to get some major sound bites over the next couple of hours that are possibly going to change the trajectory of humanity over the next few decades.
Interesting, Juliana. I am particularly interested in hearing what Elon Musk has to say, the questions he is going to throw at the British Prime Minister. I'm just, holding on to tenterhooks and saying, what is he going to say? Yes, it's going to be a hit, I assure you.
I've got to say, let me just add, I know we've got to move on, but what's quite interesting, and I mentioned this on this show yesterday with Laddie, Will, is that Elon Musk, in terms of his personality, and Prime Minister Rishi Sunak, polar opposites. Rishi Sunak also does not like difficult questions. I know he's the Prime Minister, he doesn't, and he's very OCD. So that is going to be riveting. That's taking place tomorrow on X. So yeah, very interesting. I'm sure we're going to be talking about it.
Definitely we're going to be talking about that. But how are tech stocks reacting to this summit?
Pretty interesting, actually. Not much movement in terms of tech on the London Blue Chip Index. As you know, it's not really a tech-heavy stock market. That's more of the NASDAQ. So it'll be interesting to see what happens in Wall Street overnight. But red is the colour of the markets in London at intraday. And a lot of that's got to do with BP. It was yesterday that they released their pretty abysmal third quarter results, the first that they're doing under its new chief exec since Bernard Looney stepped down last month. So not great. They're still falling today. And we also had some PMI data looking at manufacturing in the UK. PMI gives a forensic look at what's happening with the economy. It's the only thing we have live updates for. Every other data that comes out of the ONS looks in the rearview mirror. It's not looking great. Are we teetering on a recession? Let's see what happens with the Bank of England when they meet to discuss interest rates tomorrow. So the FTSE All-Share, it's down by 0.13%. The FTSE 100 down by 0.07%. And the FTSE 250, the domestic market, that's down by nearly 0.5% at intraday. In the currencies market, the British pound is currently trading down against the US dollar by 0.18%, though it's trading up against the euro by 0.13% and down against the Japanese yen by 0.47%. Great to share the screen with you again, Will.
Thank you so much, Juliana. It's good to be here. It's good to be back and talking to you again. We'll look forward to more updates tomorrow on Business Morning.
Thank you.
Now we go over to the EU, where business sentiment in Germany is quite low at the moment. Recent economic data showed that the German economy is shrinking. For decades, this economy relied on a strong industrial base to keep its engine running. And to help revive that, the ruling coalition in Germany has a plan. The only problem is that they cannot agree on this plan. For more on this, we are joined by Deutsche Welle's Wilder Imran in Berlin. Wilder, can you tell us about this plan and what it proposes?
Thanks for having me, Will. Yes, this plan, which was proposed by the Economic Minister Robert Habeck, is a very long strategy proposal in which he outlines some measures, which are plenty of state subsidies and tax incentives to the tune of 50 billion euros that would help revive the industrial base of Germany in the coming years. Now, some parts of this proposed strategy seem to draw inspiration from the Inflation Reduction Act of the US, which also employs massive tax incentives and subsidies. This proposal is important at a time when businesses may be losing confidence in the German government. According to a new survey by the Federal Association of German Employers, 82% of the surveyed business owners expressed great concerns about the state of Germany. Some 88% think the government has no plan whatsoever on how to handle this crisis. This is a setback for Germany. The economic minister, who's from the environmentalist Green Party here, has received much support from some industry leaders and union heads who have been rallying behind stronger state support in crisis times.
So, and in this, what you just said, what is the bone of contention?
So interestingly, it is a subsidizing of electricity prices, which is one of the greatest points of contention. And not just from other party leaders in the government. The discussion on electricity prices also faced resistance from within the Green Party as well. You see, making energy cheaper is totally contradictory to green climate ideology. But the party has agreed to back this proposal. Energy prices here in Germany and Europe are still very high. They have climbed down from previous high peaks, but they are still high enough to threaten the existence of many industries. The economy minister, Robert Habeck, proposes offering subsidized electricity at 6 euro cents per kilowatt hour. Now compare this to industries in France or even the US, which are offered electricity at 4 euro cents. So what Habeck is calling for is not new. It just isn't sitting well with fellow members of his government. Chancellor Olaf Scholz's party largely condoned a subsidized price. They fear industrial decline and job losses. And as Chancellor Olaf Scholz himself is not convinced by this point, we're yet to see where this proposal goes.
Let's turn to the markets briefly. What are investors keeping an eye on?
Well, there's a policy decision expected from the U.S. Federal Reserve later today. Investors, market watchers, all eyes are on this decision coming out later. Ahead of this, Asian stocks performed well this morning, while the frail Japanese yen was in focus. European stock futures opened better, with Euro Stoxx 50 futures up 0.34%. The German DAX futures up 0.37%. But this is still shadowed by the worrisome figures that showed that economic output in the 20 countries that use the euro shrank.
Thank you so much, Imran Wilder from Deutsche Welle, there, giving us updates on that. We'll look forward and keep tracking that story. And now we'll take a break now. When we come back, we'll be looking at Nigeria's plan to produce electric vehicles. That's in a moment. Do stay with us. This is Business Incorporated. Welcome back. And now, as the world's clamoring for energy transition is, coming to a peak, reaching a peak right now, the federal government in Nigeria is also saying it would leverage on its resources to establish and expand electric vehicles, So it's quite astonishing because the resources we have, we want to see how that is going to be possible. Chinan Dikwa, energy expert and vice chair of the African Energy Council, joins me this afternoon to discuss this. Good afternoon, Chinan. It's good to have you back on the show.
Real pleasure to be here.
So you're saying, well, the federal government's plan to, they just recently acquired this locally assembled electric vehicles from the pilot project. What specific policies and strategies are being put in place to encourage the mass production and possibly the adoption of electric vehicles in Nigeria?
Well, first of all, I'd say it's a very smart move on the part of the federal government. So what we're seeing here is Jet Motors, based out of Nigeria, have set up some sort of an assembly plant, and they're putting together, EVs in there, demonstrating. The federal government, of course, has gone in and has signed an MOU with Jet Motors to commercialize. So a really powerful move. Now, to your question, what's required to get this off the ground? A couple of things. So there are already actually steps to make this happen. There's a bill, an automotive bill, that sat in front of the Nigerian Senate today. That bill itself has a couple of fiscal, so financial and non-financial incentives and parameters, which is what's needed to birth an industry sector like this. So things like land, for instance, is required, for setting up such a plant, tax breaks, lots of funding and incentives and breaks. So all of these are the basic stuff that's required to incubate a very nascent sector as such as electric vehicles. And we've seen some of that already, some of those moves in other traditional sectors. And I'm beyond convinced the federal government can move that into EVs.
And so how does Nigeria plan to leverage its renewable energy resources to achieve this?
That's a fantastic question. So a couple of things. One, if we step back maybe a couple of months ago, 6 months ago, Nigeria found huge deposits of lithium. Lithium is one of the components that's needed to make batteries for electric vehicles. So Nigeria found that around the north, somewhere around Zamfara State, if I remember correctly. Now, with that sort of resource that's found, it gives Nigeria a competitive advantage in the race towards making batteries and EVs. So what the government needs to do, and I think it's doing already actually, is nationalizing such a resource and making sure effectively that any mining that happens around lithium that the federal government is doing has to be in association with all of the supply chain. So it is not simply a case of mine straight at the back of a truck and ship to China or ship into Europe, but it's a case where you mine it here, you polish the lithium here, you refine it here, all down to the grade of an electric vehicle. So I think things like that are starting to happen. Now, just to put this out actually, when Nigeria announced that they found lithium, Tesla was very quick to come and say, can we sign a deal? And one of the conditions that the federal government gave was to say, no, we won't, except if you would set up a battery plant in Nigeria.
So do we have issues of intellectual property here in terms of how do we take ownership of this? We're looking at getting truly indigenous and possibly, let's say, look at the uniqueness of our environmental conditions. How is Nigeria going to be able to handle this?
You're 100% right. Well, I mean, this again, so if you talk about IP, intellectual property, in this regard, the electric vehicle game has been going on for a long time. Nigeria is a late entrant into this. So whether we like it or not, the whole game will be played via leasing. We'd have to lease lots of licenses, with regard to electric vehicles. And there's no problem in that at all. What this would require would be signing very clever partnerships, maybe a Tesla, like we're already seeing there, maybe a NIO from China, maybe BYD, signing clever partnerships so that we can use some of the licenses that already exist and allows us to open up the supply chains in a very big way. But without a doubt, Nigeria needs to start to think very quickly around how do you even make the infrastructure for these EVs to happen? Because you think about it today, most of us drive petrol cars and petrol stations all around the place. If you bring the EV, it's not simply about the car, it's also the infrastructure investment that's required to get that going. So that infrastructure investment needs to be happening in tandem to getting the vehicles as we try to purchase them.
Okay, thank you so much, Chinandikwo, Vice Chair, African Energy Council, for sharing your insights. Sorry, it seems to be rushing you, but we're out of time. Thank you for this insightful perspective.
Pleasure. Thank you.
Now, the British government, through the British International Investment, has committed $26.5 million to address food security in Nigeria, Kenya, and Uganda. The fund, which will be managed by Afex, a commodity exchange in Nigeria, is targeted at providing additional 230,000 of storage capacity to enable 200,000 more farmers access low-cost storage, among other facilities. The announcement was made at the signing ceremony in Lagos today, and we'll see how that continues to develop. But we now move to Kenya, where its inflation rates unexpectedly quickened to a 3-month high in October owing to higher energy prices. Consumer prices rose an annual 6.9% in a month from 6.8% in September. The Nairobi-based Kenya National Bureau of Statistics said on Tuesday in an email statement that the estimate of following the estimates of economists, this was below expectation, or above expectation, actually. Now, the reading will weigh on the central bank's rate-setting monetary policy committee, which meets in early December. The central bank's governor last month said he expects the overall inflation to remain within the bank's target range of 2.5% to 7.5%. Now in Uganda, the Ugandan government has announced plans to stop the importation of petroleum products directly through the Uganda National Oil Company, while halting importation of oil through Kenya, citing high prices from government-to-government deals. Uganda Energy Minister Ruth Nankabirwa said the country is amending laws to allow UNOC to participate directly in the import market and supply to the country's licensed oil marketers. The country sources 90% of its petroleum products from Kenya through the port of Mombasa and 10% through the port of Dar es Salaam, Tanzania. And that's a wrap on Business Incorporated. We'll see you tomorrow for another edition. I'm Will Ibang. Thanks for watching.